Hey guys, and welcome to our 9 crucial steps to you becoming a homeowner in 2025. So, I have had the pleasure of working with many first time home buyers since I started my real estate career in the 90s, and I know it can be so scary. And I just wanted to put together something to help guide you through the process and kind of demystify what it looks like, because when you know what to expect and know the steps, it empowers you to make the decision whether or not being a homeowner right now is for you or not. So, for those of you who do not know me, I am Lisa Bertosa, broker and owner of Keystone Residential Group. And I'm also a mama to a rock star drummer in a band called Dark Divine. Look them up, they're pretty awesome. And also mama to an almost 18-year-old Chihuahua who is behind me snoring. You may or may not hear her during this webinar. So thank you for joining us. We want to empower you, like I said, to understand the home buying process. And in order to do that today, I have brought along with me some co-hosts. We have Shannon from Magnolia Title, and we have Dan Flint from Patriot Home Funding. These two are very instrumental in what I do and how I conduct my business. They are the best of the best, and I wanted them to join us today to share their expertise with you. So we're going to start ladies first with Shannon telling us a little bit about herself, and then we'll go to Dan, and he's going to begin our process today on getting your approval for your loan. So anyway, let's get going. Shannon, tell us a little bit about you.
Thank you, Lisa. My name is Shannon Parton. I am the branch manager and escrow officer here at Magnolia Title in St. Cloud. I'm a licensed title insurance agent with the state of Florida, and I've been in the business for 26 years.
Since you were a baby too.
Yes, so since I was a little baby. Yeah. I was born and raised right here in Osceola County. I'm married to my amazing husband, Ira. We have 2 kids and 1 grandbabe. So thank you again for having me on. I love what I do, and I love talking about it.
And I know that, and you are so helpful always. So thank you for that. All right, Dan, we are going to let you introduce yourself and then get going with how we can get people pre-approved. What's that process look like? So go ahead.
I'm Dan Flint. I'm with Patriot Home Funding, a loan originator. I've been in the mortgage industry, I don't want to go into it, over 30 years. I've had pretty much every position from collecting delinquent payments to foreclosing properties to doing new loans to sales, operations. Pretty much, I've seen pretty much everything. I just noticed, by the way, that my closet door is not on behind me, so that looks really good. Yeah. So back to the process. I've done pretty much everything in the industry. Now I just originate loans. I've helped probably thousands of first-time home buyers. Without exaggerating, it's been that many. And each one is individual. Each one has individual needs. They're all fun, and some are a little more rewarding than others. But it's a challenge, and it's something that we love to do. So it's real important for our industry. So.
Well, I can tell you that the buyers that have worked with you have all raved about you. And I'm not saying that just because you're on the call. I always say if Dan can't get it done, no one can get it done. So you are amazing, and you have actually gotten some of my buyers approved who were denied. I'm thinking of one in particular recently that was denied with his credit union. So yeah, if Dan can't get it done, no one can. So I'm going to let you get going with the presentation, Dan, and maybe also explain to them the difference between what you do as a broker and how that can also benefit them.
Sure. Let's start with that, because that's something I run into probably on a daily basis. Kind of the difference between what I do now as opposed to what I used to do. I always worked for large mortgage companies, the ones you see on TV. the ones that have stadium deals and Super Bowl commercials. And you pay for that, by the way, just so you know. I was in mid management with all the big guys for years. And when I got back into just originating loans, I found that as an independent broker, I was able to take better care of my clients. Not only can I find products that other people don't have, I'm also able to shop interest rates with 15 or 16 lenders. So typically when I quote a rate in the pre-qualification process, when my client decides to make an offer, at that point I'll shop it around and find the best terms for them. So it is a big difference as opposed to going to your credit union where your checking account is and just depending on what they have. They're selling their product and that's it. So whatever they sell you is what they think is best for you or what they were told was best for you. I'm able to go out and shop that around and find truly the best terms. So it does make a difference.
It certainly does. 100%.
Sure. So if you want to go ahead and get into this slide.
Yeah, so let's get into it. Let's talk to them about, the credit score and the mortgage approval process and why these things are important.
Right. So credit scores are probably one of the most misunderstood things in our industry and in every industry. They're necessary for everything today, from buying car insurance to getting a mortgage loan, and they determine your terms that you can get, even on your insurance. Your insurance rates are based on what your credit scores are. That's one of the factors. So in the mortgage process, it's not the be all end all, but it is a determining factor in not only what programs you qualify for, but what your terms are, what your rates are. So what I normally would tell people, first time home buyer, is everybody today monitors their credit score with their credit card companies or freecreditreport.com and all that stuff. So the first question I ask a buyer is, what do you think your credit scores are? And everybody has an answer today, which is different than where it was 10 years ago. I will tell you that what you're seeing is going to be a different scoring model than a mortgage report. It's just a different model. Typically, your credit score from Capital One is going to be a little bit higher than what it would be when a mortgage company pulls your credit, just because it's a different model. We also use all three credit bureaus where, if you go buy a car, they're going to use one of the three. So what we do is we pull what's called a tri-merge report. It gives us all three scores, and then we're going to use the mid score of the three. That's what we're required to do, and that's what all mortgage lenders will do. From there, when we price your loan out, that is one of the factors that goes into what your rate is. On the slide, the key factors that kind of drive the credit score would be your payment history, and that is going to be, obviously just how do you make your payments? Do you pay your bills on time? Debt utilization, it means, for example, if you have a credit card with $1,000 limit, how much of that do you use on a regular basis, and how much of that do you carry on a monthly basis as far as keeping a balance? Typically, if your limit as opposed to what you owe is less than 35%, it's going to give you the best credit scores. So that's something you've got to kind of watch. Length of credit, the longer you have a credit history, the better your score is going to be. Quick story, and I don't want to go too detailed. This just happened yesterday. I had a customer that was trying to buy a house for his daughter. He wanted to put his daughter on the loan. And I asked him, does your daughter have any credit? He said, no, she's never had a credit card. Has no credit. She's in college. So instead of pressing him, I took that answer, even with the experience I have. And then it came down to the point where I had to add her to the loan to make it owner occupied the way we wanted to. So I convinced him to let me pull her credit, and she had better credit scores than he did. And it was because they had put her on their credit cards as an authorized user. So this girl, 22 years old, had 28 months worth of credit history, and her credit score was 780, and her dad's was 771. So just something else I learned after 30 years. So it does make a difference. As far as minimum scores, the goal is a 580 score. That's kind of the entrance level to get into the mortgage game. 620 and above are going to give you better rates and better terms. For example, you can get FHA loans and VA loans, USDA loans, all that with a 580 score or less. You have to have a 620 or higher to get a conventional loan, which is just a different program. Typically, FHA is going to be the best bet for a new home buyer. So as low as 580. But one of the things that I recommend for first-time home buyers is to get this score pulled early. As quickly as you start talking about buying a house, you want to contact Lisa and start talking about the process, get pre-approved, and then you have time to make corrections. It's not impossible to get I've had credit scores go up 100 points in a month. It's just a matter of someone telling you this is what you need to do, and it's not maybe what you think you need to do. You don't want to pay off debt, things like that will drive your score. So there's a lot of little tricks in getting credit scores up and improving them quickly, but it's not what you're going to find on Google. So you want to call an expert.
Yeah, I got to stay on top of that score. It's so important.
Right.
All right, so bring us into employment history and stability.
Okay. Can I see that slide again?
Yep, sorry.
Okay.
let me get you back there.
Job consistency. Okay, what we typically look for when we start an application or a pre-qualification is a 2-year job history. Now, we're required to show what you've been up to for the last 2 years. A lot of people think that it must be, I have to be on the same job for 2 years or I just don't make it, I don't qualify, which is not true at all. You can have, not that we would like it, you could have 20 jobs in 2 years and still get a mortgage. It's just we have to document each job, each start and end date, and the reason that you left. And if it's I did it to move up, I did it for a raise, I did it because the boss hated me. We need to know all that stuff, and with that we can build a satisfactory job history that makes a difference. So 2 years in the same field is good. If you say you just started a job in September as a teacher in Osceola County, we have to go back and look at your transcripts from school. So if it's a brand new job, but you have schooling in that job or in that field, then that's okay. So it's just a matter of building your history for 2 years, and again, working with someone who knows what they're doing. And I bring that up because you could go into I won't mention any lenders' names, but there's one in particular that has a really cool commercial, and they've got a really neat phone app. You can go in there and I can get you a pre-approval in 8 seconds, but it doesn't mean anything because they don't ask the questions. They can say, what do you do for a living and what's your income? And that's the only question. But all that makes a difference. And, for example, down below there was the self-employed. That's one of the things we're talking about. If you start a new job, let's say your last job you worked at Lowe's and you were paid by the hour, no problem. If you get another hourly job or another salary job, you start tomorrow, that's okay. If you start a job tomorrow that's commission, it's a 2-year history. So there's lots of little variables that we have to look at. So you want to be careful with some of the simple, this is your approval, give it to your realtor, let's go look at houses that may not mean anything. So we really want to look at that.
Yeah, and I think the moral of the story too is to not do anything if you're thinking about buying a house in the near future. Don't change jobs. Don't do any of that, right?
Absolutely right. I would tell people, if you start deciding on Sunday you want to buy a house, don't buy anything. Don't move any money in the bank. Don't change jobs. Don't lend your sister $50. Don't do anything until you talk to a realtor and a lender, so we can kind of guide you, because there are ways to do everything, but we have to know what you're up to so we can tell you the best way to cover that. So,
right.
The self-employed piece is a big one. Let's go back to the Home Depot example. You're working at Home Depot and you're selling paint and you're getting paid by the hour and you're fine. Well, you thought, well, Home Depot's doing a great job, but I can make more money if I sell my own paint. So then you start your paint company. You got to be 2-year history before you can get a mortgage loan. Even though you're making more money, I hear it all the time. I doubled my income, but I don't have a history of that. And you're no longer employed by this big blanket corporation. So we're going to have to look at that and spread it out. Sometimes you can get by with a year with a filed tax return if it's in the exact same field, but it's going to have to be a year with a filed return. So The job history and stability is a kind of a gray area. It's complicated. And again, if you look it up on Google, you're going to be lost because Google doesn't know what questions to ask you. So
Right.
I spend the most time on a pre-qualification on this section than any, because you have to know, my dog just came in too. If she starts snoring, it's not me. I have an 80-pound petite flower lab female. So
Named Kona.
Kona, yeah. Well, yeah. He doesn't come back here usually.
I know.
So I got lost. Anyway, the job thing is big. Something as simple as if you're a nurse and you have an hourly wage and you enter that in an app, and I have a pre-qual app as well, but I always follow up with a phone call, because if you tell me you make 70 grand a year, I'm going to break it down and make sure that we can use 70 grand a year, because some of that may be bonus income that you just started receiving, or it's a shift differential on a nurse that you didn't get before. There's all kind of things we have to look at. It's called variable income, so we have to really dig into that. So
Yeah.
again,
So getting the process started early is very important. Yeah.
Early on any of it, on credit, on how to save money, on how to get qualified with your income, everything.
Right. So next up, we have the total cost needed to purchase. I mean, it's not just the down payment that we need to be aware of, right?
Absolutely. So in this, good slide, by the way, down payments are as low as 3%, as low as nothing down, depending on the buyer. Up to 3 to 20% is kind of what we see most of the time. If you're a veteran, you can get 100% financing, which is a huge benefit for a veteran. If you're out in some of the areas where Lisa is, you may still there's still some USDA loans available that are 100% financing, and you can finance the closing cost on some of those. So
yeah, what he's talking about, guys, is USDA offers financing in rural areas. Now, when I moved to Osceola County over 20 years ago, a lot of Osceola County was considered rural, and you could qualify for USDA financing, but that's getting further and further out. So,
and now you can look at property up across the street from one that qualifies and doesn't qualify anymore. So it's something to watch, but it is out there, and we're still seeing some of it. Typically, a first-time home buyer is probably going to be in a 3 to 3.5% down range. 3% down if you have really good credit. A 3% down conventional loan is a way to go. If your credit score is, say, less than 720, FHA is probably still going to be your best bet, which is 3.5% down. Both programs allow a gift for down payment and closing cost, which means that a relative could gift those funds to you. There's lots of ways to come up with down payment, which we can get into if you'd like, but closing costs are going to be, again, a typical 3% above your down payment, 3% of the sales price for closing cost. Again, that can be gifted, that can be paid by the seller in some circumstances. All kind of ways to make those numbers work, but you got to know up front so that it can be structured correctly with your realtor and with your lender, because they know what houses you're looking at, which ones sellers may be willing to help with or can help with. Lots of different things there, but lots of ways to come up with down payment and closing costs. There are still down payment assistance programs out there. Probably the most popular and well-known in Florida is the Hometown Heroes program. It used to be only for, 25 different professions that were typical first-time or hometown heroes, first responders, teachers, that kind of thing. They opened it up now, and there's no job restriction anymore. It's everybody. So what that means is great for everybody, tough to get the money because it goes so quickly. I think twice in the last 2 years, they came out with $100 million allocations that were gone in 60 days. So what that means is it's a great program. You want to get your loan and your search started and be in the process somewhere if and when that money comes out, because you got to jump on it. And you can't reserve it without a contract. So it's something you want to, you just can't say, guys, I read about this program, let's get involved. By the time you get involved, it's probably gone. There are others out there. I can't even tell you what they are today because they change so often and they move so often. Some are individual companies may have some programs where they'll give you $5,000 towards your cost or whatever. There are some, different municipalities, counties, the state will come out with different programs, but it's just a matter of when you get in and when you're looking to kind of start finding out what's available at the time. Okay. The other involved up front would be some inspections. Typically, realtors are going to recommend that you have a property inspection done. What are they, $400, Lisa, roughly?
Yeah, we're going to cover that when I go through the buying process. But yeah, a home inspection is going to cost between about $400 and $500.
Okay.
So yeah, that's out of pocket as well as the appraisal fee, right?
Yeah, normally the only two things you're going to pay out of pocket up front would be any inspections required based on your property type and your program, and then your appraisal, which is going to be between $525 and $650, depending again on the loan program and the type of property. Type of property meaning if it's a condo, it's a little more expensive for an appraisal. If it's a manufactured home, the appraisal is a little higher. If it's an investment property, which we're probably not going to deal with on this call, but those are even more. So, and then you got once we get through all this, then you've got the joy of your moving and initial expenses. So moving expenses, if it's in town, you call your cousin and get them to help. Shouldn't be too bad. I've moved. One of the beauties of having a pickup truck is you get that invite quite a bit.
Beer and pizza, right?
Beer and pizza. I've moved a lot of folks. Cold beer and hot pizza, or hot pizza and cold beer. So the initial expenses are going to be obviously setting up your cable, setting up your electricity, your internet,
changing out your locks.
Changing out your locks. So that could be as little as a couple $100 to $1,000, $2,000, depending on what you're doing. So
yeah, it's just something to be mindful of,
something to keep track of. You got to buy a lot of pizza and beer.
Right. So we'll move along now to the pre-approval and why it's so important.
Okay, and it's super important. It does show sellers are serious, obviously, but it's also going to, I think the main thing that I do now with pre-approvals is setting the right expectations with the client, because everybody has a house in mind that usually is a lot more than they want to spend, or a lot less than they think they can spend. So it goes both ways. But what I typically will do is start out with a monthly payment. What are you comfortable with? How much do you want to pay? And they say, well, I want to pay $2,500 a month. Well, that's great. The price range you gave me, the payment would be like $4,000. So let's back into that number and get us a realistic sales price. And that gives your realtor as well something so they know a little bit more about not only what you want to buy, but what you can buy. Because a lot of times people will buy less home than they actually can qualify for. When I tell them sometimes what they qualify for, it shocks them. But they don't want that high of a payment typically. So and it does speed up the closing quite a bit. If during the pre-approval process, usually I will get W-2s, pay stubs, bank statements. So when you actually write your contract, I'm ready to submit the loan to underwriting. It's pretty quick.
Exactly. Yeah. Those are things to get ready when you think you're ready to go ahead and start that process. Have those things in hand, right?
Exactly. The W-2s are obvious. Obviously, we need those right away. Pay stubs are big. Bank statements are big. Tax returns, not so much anymore. Only really if you're self-employed. Up until recently, even if you were commissioned and you wrote off expenses, we had to have tax returns. Well, that deduction has gone away. So unless you're self-employed, if you're just an employee with non-reimbursed expenses, you can't write them off anymore. So it made that easier. For our side, it hurt on taxes, but so I would start gathering that information up front. Don't be upset if you're asked for that same thing 2 or 3 times during the process, because they change. For example, I have a loan with Lisa's team that I'm closing next week, and I'm waiting on an updated pay stub because I have to have, they have to be within 30 days of closing. So if you gave me one 45 days ago, I have to update it. So, they'll call, typically a buyer will call a realtor and say, Dan's asked me for the same thing 3 times. Got to have it 3 times. It's changed. So that's why. And bank statements are big. And I will reiterate again, I know I said it earlier, do not move any money. Don't say, well, I'm going to take it out of my savings account, so I'm going to move all my money into that account. That's going to give us and use so much work, you're going to be discouraged. So just
Yeah, and something else too that I've learned from working with you, don't pay off anything. Wait until you speak to Dan or whoever you choose to speak to, before you pay off anything. You may not have to, and you may need that money for something else. It may benefit you more by using that money somewhere else. So when you go to talk to a lender, it's okay to not know exactly where you stand, because they're there to guide you. They do not hold judgment. It's fact finding, and it's a conversation, and I know Dan does a fabulous job at guiding my buyers that need to work on a couple of things or need to get a couple of things together. He does a great job educating buyers on how to get ready when the time comes. So, and I appreciate that. And that's one of the reasons I love working with you.
Yeah, it's better to not do anything. Just leave your situation as is and be super honest. So this is exactly what I'm dealing with. And this is an overused cliche, but there's no such thing as a dumb question. Just be honest and lay it out and ask any questions you have. And from there, we can build this, like build a bear. Like I said, we can tell you what to do next and what the next step would be and where we'll be in 30 days and all that. So it's just so much easier and smoother.
Perfect. Love that. Well, do you have anything else to add before I start talking about the fun part of buying a house?
Well, I'm excited about the fun part.
All right. Well, thank you. And guys, while we're going through this, I should have said it in the beginning, but it's okay to ask questions as they come up for you. We'll try to pay attention to that in the chat and answer those questions. We may not cover everything that you're thinking about, so don't be afraid to ask your questions. All right, so I think I just figured out a couple of things here while we're working through this. Yep, I just removed Dan and then Shannon. All right, so I will, I think it's less busy, and we'll add y'all back, add you, Shannon, when you get ready for your presentation. But I'm going to get into the fun part of buying a house. Once you have spoken to a lender, you have your pre-approval in hand, and you know what your price point is, what you're comfortable with, then we can go and start putting together your wants versus your needs. And I do suggest putting this on paper. It really helps for you to be clear on what you want and versus what you need versus what you want, because it's very easy to get overwhelmed when you're excited when you're out there looking at houses, that you just see this perfect little house and you have to have it, but at the end of the day, it's not in the location that is where you wanted it to be, or what have you. So be clear on your must-haves and your nice-to-haves. Your must-haves are things like the location, the price, the size of the home and bedroom count, your commute to work, or do you need a home office? Do you work out of your home? That would definitely be a must-have. And then some of your nice-to-haves would be the luxury things like a pool or an extra garage or a garage at all. And those upgrades, we've got to start somewhere. And the sooner you get into owning a home, the quicker you're going to be able to move up into that dream home that you really want. I've got a great example. Dan and I worked with a couple, I don't know, 4 or 5 years ago, I think it was, and they didn't have a huge budget. They were just getting started. They'd just gotten married, and we, with their budget that they were comfortable with, were able to find them the cutest little 2-bedroom, 1-bath bungalow on the state streets in St. Cloud, if you're familiar with that area. It wasn't their dream home, but it was adorable, and it was someplace where they could afford. And in the meantime, they lived there for less than 2 years, paying their mortgage payment. And at the same time, they were gaining equity with that property. And in the last 5 years, our properties have gained so much equity so fast. They were able to, I think it was really less than 2 years, sell that home, move up to the home that's more ideal as to what they were looking for: a 3-bedroom, 2-bath with a 2-car garage, and a big screened-in back patio for them to host football games and game days. And it was closer to what they wanted. They lived there for between 1 and 2 years, and they were able to sell that and build their dream home. So it was that quick, but they wouldn't have been able to get there that quickly if they had not bought that little 2-bedroom bungalow that gave them the ability to accrue the equity that they use to move on up. So your first home's not going to be your dream home. I don't want you to get caught up in the HGTV shows and think that it's going to be this perfect little thing, because the name of the game is to get into owning a home so you can start building equity, and then you can move up from there. So be flexible when we are looking at homes. Don't get fixated on the perfect kitchen. As long as it fits your needs at the time, no, it's not your forever home, and you can get into it and start building that equity. So there's some smart ways to search for a home. Last year, we had some changes to the real estate industry. We now, as a buyer, you're required to sign a buyer's brokerage agreement. In that agreement, it basically just states what you can expect from your agent. And it also has a beginning and end date. And basically it's saying that you don't have to marry me or whatever agent that you enter that agreement with, but you do have to date them exclusively during the home buying process. And that form is needed before you can actually start going into homes. The only way you can actually see a home without signing this form is if you go to an open house. You can go to any open house you want without having to sign that form. But in order to start really looking at properties, we'll have to get that form signed ahead of time. Even if I'm showing property to my mom, she's got to sign it too. So that's completely normal now, as of last year. So when you are looking at homes and you do find one that fits your needs, and you're not super aware of the neighborhood, it's a neighborhood that you don't frequent often and you're not sure about it, I suggest going to drive through that neighborhood at different times of day to see how busy it is. And go through there on the weekend just to take a look around, just to make sure that you are comfortable with what's going on in that neighborhood, and that it will also meet your needs for the next couple of years, however long you're going to be there. Also, when we find a home that we're ready to make an offer on, we put together that offer differently depending on what kind of market we're in. So you want to work with a real estate agent who is seasoned and does it full time, because you have to really pay attention to the market and be aware of what sellers are doing to help out buyers, or is it a seller's market like we've had in the past few years, where sellers didn't have to do any contingencies. They didn't have to negotiate on price or help pay closing costs. We're now coming into more of a normal. We have more inventory to choose from, and sellers are becoming more open to negotiations. They're more open to reducing the purchase price, negotiating some of those closing costs, perhaps. So working with a seasoned agent who knows what market we're in and knows how to put together an offer based on that is going to be ideal with getting the home that you want. All right, so making a strong offer, again, depends on the market that we're in. But we're going to, once we find the home we want to put an offer in on, we're going to discuss where we want to come in as far as the price that we're going to offer them. Before we do that, I will look at the comparables in that neighborhood and let you know what similar homes have sold for recently, and then we will together come to a price you're comfortable with offering on that home. In addition to the offer, the price, then we're going to have to put down an escrow deposit should our offer be accepted. That escrow deposit is approximately 1% of the purchase price. It is held at the title company and you get credit for it at closing. So it's not money that you lose. It is money that's credited to you at closing. There's other contingencies too in that we put into the contract. One of the contingencies is the inspection period. That inspection period is negotiable, but it's usually about 5 to 7 days. Sometimes sellers will allow us up to 10 days to get all of our inspections done. This is an extremely important time. We want to hire a home inspector to take a look at the home. It's not a pass or fail type of inspection. It's more of a report card of what that home, what the systems, how the systems are working, how old the systems are. Systems meaning the HVAC, the plumbing, the electrical. The inspector will also get on the roof and inspect the shingles for any hail damage and give us an estimate on their opinion of how much life that roof has left in it. They'll go into the attic and take a look around, make sure there's nothing out of the ordinary up there. And they're going to give us a report based on their findings. I think it's very important for you as a buyer to be present for that inspection. If you're not able to be, your agent should definitely be there. I'm always there for those inspections. And if my buyers aren't able to be there, then I at least try to FaceTime with them at the end of the inspection with the inspector, so that inspector can go over the findings with you and you can ask any questions. You get this report and it's got this much stuff on it and it looks really scary, when a lot of that is just normal things that, you know, the home inspector is going to find on a home. Now, if there are some things that are going to be big ticket items that we were not aware of when we put the offer in on that home, we may need to go back to the seller and negotiate that. We can negotiate money towards some of those big ticket items to take care of it. We can negotiate maybe on them coming down on price, or we can just decide to back out of the contract. During that inspection period, you can back out of that contract at any time for any reason and get your escrow money back. But if you've already had your home inspections, then you're, of course, going to be out that money. But that's an important thing to do. You never want to skip home inspections. It's crucial. You want to know what you're buying. So let's say that now we've moved on beyond the inspection. That is when your escrow money goes hard. That's a term that we use, meaning it's not so easy to get that escrow money back. The only way really per the contract for you to be able to get that escrow money back and not close on that home is if you end up at the end of the day not qualifying for your financing. Now, this shouldn't happen, but sometimes if people go out and buy a house full of furniture and put it on credit at Rooms to Go before they close on their home, well, that may ruin their debt to income ratios. And at the end of the day, they now can't qualify to purchase that home. And so you won't be able to get your loan. We can go then and cancel the contract and get that escrow money back. But after the inspection period, you can't just change your mind and get out of the contract. It is a legally binding contract. Another contingency on the contract besides the inspection and the financing contingency, or not a contingency, rather, something else that's negotiable is the closing date. We can usually ask for about 30 days to close on the property. That gives us time to get the inspections done and it gives time for the lender to get all of their process done, as well as the title company. The title company is going to be working in the background during our inspection period. They're going to be doing title search and exam. They're going to be doing a lien search, and Shannon's going to explain more of that to you when she takes up the presentation after I'm finished. But that's another important part of the buying process, is the title work. So we get beyond the inspections and we're moving on. Everything is good. You're financing, you finally get your approval for that. Everything comes back fine. And now we are getting ready for closing. We will do a final walkthrough on usually the day before closing, sometimes the day of closing. And what the purpose of that is for us to make sure that the property is in the same condition as it was when we put it under contract, that the seller didn't have any damage done to the property when they were moving out. And if there are any repairs that we had to negotiate, make sure those repairs have been done as well. We go make sure all that's done, and then we go to the title company where we will be walked through the closing documents that the title company will get from your lender. And once all of that's done, you get your keys. So I know that kind of sounds like a simple process, but that's just kind of the broad overview of what the house hunting, finding your home, and getting it under contract and getting to the closing table looks like. So now I am going to pass it on over to Shannon, and she is going to tell you all about what she does at the title company to prepare us for closing. Take it away, Shannon.
Thank you, Lisa. So my job as a title insurance agent is to issue you clear title to the property that you're purchasing. So Lisa will prepare your sales contract, Dan gets your pre-approval, and then I begin my part of the transaction. Lisa will get me a copy of the sales contract, and we will open escrow, and we will receive the escrow deposit from you. We'll go more into the safety and security of that escrow deposit in a little bit. To issue you clear title, we do a title search on the property. That title search investigates the property for the clean ownership. From that title search, we do an examination, and we produce what's called a title commitment. That title commitment is our commitment to you as the buyer and to your mortgage company to issue clear title on the property. We will order what's called a municipal lien search, and that checks with the municipalities in our area, items that are not of public record, such as code enforcement liens, open permits. If the seller has a mortgage, we will order a statement directly from their mortgage company so we can pay them off at closing. And we request a document called a homeowners association estoppel letter. That homeowners association estoppel letter will talk about monies owed and if there's any violations with the HOA, the homeowners association. So we will use all of those reports along with that title commitment, and we will clear up any title defects that there may be on the property. Once those reports come in, we confirm that title's clear. Dan will confirm that your loan is clear to close, and then that's when we move to the closing table. So I work with Dan on getting your loan documents sent to my office. And as a title agent, I actually prepare the title transfer documents for the seller to sign. So we make an appointment with you and the seller. We can close right here in my office, or we can make accommodations based on your availability. And I will sit down and I will explain to you all of the closing documents, the loan documents, along with the title documents. Dan will be available to assist you with any questions that you have related to the loan. and Lisa will be sitting next to you to guide you as well. Once you sign all of your closing documents, we receive all the funds from your mortgage company. You send us your funds. We will celebrate. You get your keys, and we have a great celebration. Our team will transfer all the payments to the appropriate parties, and then we file the deed and the mortgage with the county courthouse and transfer you ownership of the property. I wanted to point out that once the closing is over, we don't go away. We will be there for you for any questions that you may have. We can assist you anytime. We will give you physical and electronic copies of all of your closing documents at the time of closing, and we will keep those on record. So this team does not go away. We're a great team. We work well together, and we will always support you throughout the ownership of your property.
Awesome. I can attest to that for sure. Your team's always great to work with, and we appreciate that. Like I said, guys, if you work with a seasoned agent, they have surrounded themselves with the best of the best. And I have done just that. I know the best lenders and title company. I'm a loyal person to refer business to them because I believe in them, and they've always done a really good job, including Shannon and Dan here. And I also have a list of inspectors that I've worked with many, many times through the years. So when you work with a seasoned agent, you should be in really good hands because they work with these people day in and day out. So I hope that this has given you, answered some of your questions and empowered you to make the decision whether or not this is the year for you to become a homeowner, or maybe you've got some work to do and now you have a better understanding of what direction you need to go. But you probably do have more questions. And if you do, I've put my QR code here that you can scan. It's going to take you directly to my calendar, and you can request a meeting right there in my calendar that works best for you. That can be an in-person or a Zoom meeting, whichever you prefer. So again, I appreciate you joining us today. And Shannon and Dan, thank you so much for taking the time out of your busy lives to join us here to give us your expertise on becoming a homeowner. So thank you, guys. And thank you for joining us. We appreciate y'all joining us too. And we look forward to hearing from you, and we wish you luck on your home buying journey should you choose to use someone else. Mainly this was just to give you an oversight on what it looks like to buy a home. So, all right, guys. Well, thank you. Y'all have a great evening, and I'll be talking to all of you here soon. All right, guys. Bye-bye.